This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachurdes. Thanks for joining us at XM.com. The main event today will be the European Central Bank meeting, which should be interesting after President Lagarde promised to deliver new policy signals. The central bank recently raised its inflation target, and it wants to demonstrate that it's serious about hitting it after failing to do so for a decade. This means committing to negative interest rates for longer and perhaps signaling that asset purchases won't be dialed back anytime soon. The bottom line is that the ECB doesn't want markets to think it is heading towards the exit like the Fed or the Bank of England are doing. It wants to stress that it will remain in cheap money policies far longer. The reaction in the euro today is tricky to call. In the bigger picture, though, this is bad news for the euro. The ECB is locking itself into negative rates at a time when the Fed and other major central banks are moving towards higher rates, crystallizing the divergence in monetary policy. This could cement euro-dollar at lower levels, as the euro remains the market's favorite funding currency for carry trades. The panic that gripped Wall Street earlier in the week has all but vanished, with the major U.S. indices heading back towards their record highs. There's been no real catalyst behind this sudden change of heart. Strong earnings and cheerful guidance by several heavyweights might have dispelled some Delta blues, but probably didn't move the needle much. Instead, investors seem to be falling back to the only trade that keeps on delivering: long stocks. The only real risk on the horizon is a Fed tapering decision, although even that might prove to be a mere speed bump in this incredible rally. The newfound calmness in stock markets was also evident in the FX sphere. The US dollar took a step back as traders rotated away from defensive plays, allowing risk-sensitive currencies like the Aussie, Kiwi, and Loonie to stage a comeback. But gold prices remain under pressure. Bullion has drawn the shortest straw in this latest market rotation, unable to rally during the brief panic as the dollar strengthened, and now getting hammered by rising treasury yields as the bond market calms down. This is today's Daily Market Comment. Thanks for joining us at XM.com.